everyone, this is the first in a series of 3 videos to go through the fundamental knowledge required, in my opinion, to be a good price action trader. So I'm not going to talk about strategies, just talk about knowledge, type of knowledge that you need to know inside out before you can move on to the next step of using that knowledge to develop trading strategies. Okay, so this video is going to cover the following topics: what is supply and demand zones, turning points, terminology that I use, what is meant by fresh supply and demand zones, and why do we need to know this knowledge? Why is it useful? Okay, so to start off with, what is supply and demand? The basic economic model of price determination in any market is supply and demand. Be it a market for oranges, computers, or the forex market. Supply and demand is a fundamental driver of price. Okay, demand is the quantity of a product or service which is wanted by buyers at a certain price. Supply is the quantity of product or service available for buyers at a certain price. Okay, if demand for a certain product exceeds the available supply, then prices will tend to rise. And conversely, if the available supply of a product exceeds the demand for it, then prices will tend to fall. Okay. When demand exceeds supply, or vice versa, this is called a supply-demand imbalance. Okay, supply and demand imbalances are what causes price to move in a market, and price will tend to move until a new equilibrium is reached, i.e., until supply and demand are in balance again. Okay, so we can apply that to the forex market, in that it comes to reason that price moving up on a chart of any given currency represents demand exceeding supply. Okay, so for example, for the euro, if the price is rising, then buyers, be it traders or investors, consider the price of the euro cheap and thus are willing to buy it. Okay, likewise, if buyers consider the value of the euro too high, then price will fall as supply exceeds demand. Okay, price will fall until buyers consider the price of the euro attractive enough to buy again. When price consolidates, the supply-demand relationship is in equilibrium, as the amount of euro buyers are willing to purchase is the same as available supply. Okay. Now, when we say in equilibrium, prices in the forex market don't tend to stay at one price. Okay, they will stay within a confined range. So really, it's theoretical equilibrium or relative equilibrium in terms of the price range that price will move between when supply and demand are in balance. Okay, so that's an overview of what supply and demand is. It's a very basic economics, I meant to say. So now we're moving on to looking at supply and demand on a chart. Okay, now the first one is supply and demand zones. Okay, so as I said before, when price is consolidating, supply and demand are in imbalance or in equilibrium or relative equilibrium, and when price is falling or rising, supply and demand are not in equilibrium. So in this case, price is falling out of this consolidation, supply is exceeding demand. Okay, and conversely, we have the consolidation zone here, and then price rises as demand is exceeding supply. Okay. So we now know that price moving from a period of consolidation is a supply and demand imbalance, with the direction of the price movement dictating the type of imbalance that is occurring, i.e. price moving up represents demand exceeding supply and vice versa for price moving down. Okay. Following on from this, we can also determine the size of this imbalance. Okay, we can look at the momentum which price leaves the consolidation. Okay, so it should be logical to conclude that a sustained high momentum breakout of a period of consolidation represents a strong supply-demand imbalance. And that's an important point. So if we look at this example here, this is obviously a very high momentum break. So we can conclude that the supply-demand imbalance coming out of this zone is very significant. Okay. The other area on a chart that we will see supply and demand imbalance set swings, swing highs and lows, or what I call supply and demand imbalance turning points. Okay. These basically represent a change in the direction of the supply-demand imbalance as the trend is reversed. Okay, so that's why I call them supply-demand imbalance turning points. As we can see in this example here, we have supply exceeding demand, and then we don't have a period of consolidation on this time frame. We basically have a reversal as demand exceeds supply. So this is the turning point. This is a turning point here. Okay. Okay, so therefore, on any chart, on any time frame, we can identify both consolidation zones which have resulted in a significant supply-demand imbalance and turning points where change in the direction of this supply-demand imbalance has occurred. Okay, so look at another example where we can identify consolidation zones and turning points. Okay, CZ is also a consolidation zone and TP a turning point. Okay, so we can see here we have a clear consolidation, we have a supply exceeding demand imbalance and price falls, another small consolidation, price falls again. This one is both a consolidation and a turning point because it's occurred at a swing low. Okay, here we can say we haven't really had much of a consolidation, so this is more of a turning point, it's a swing high, and we can apply that, keep applying that. So again, consolidation and a swing high, so it's a turning point. Just a consolidation, it's not a material swing. And this one is obviously clearly a turning point. Price has been suddenly reversed on this time frame, and it's at a swing low. Okay. But rather than labeling the origin of a supply-demand imbalance or change in direction as a consolidation zone or turning point, it's much easier just to label them as demand and supply zones. Okay, so if supply is exceeding demand out of a zone, then this is obviously a supply zone because this is where the supply exceeding the demand imbalance originated. Okay, so looking at the same chart again, we just mark them simply supply, 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 demand. Okay, so demand zone is where demand is exceeding supply, i.e. where the imbalance occurred within this zone. Okay. Okay, and the next topic is fresh supply and demand zones. Okay, fresh supply and demand zones refer to ones where there has not been a supply and demand imbalance in the past. Okay, i.e. this is the first time we've had a supply demand imbalance out of a particular zone. Okay, when price comes back for the second, third, or fourth time, this is not as a fresh supply and demand zone. Okay, so if I move on to my next chart, if we focus on this area here, okay, we can see we've had clear demand come in here. We've had clear demand come back in again, and then we're coming back for the third, or whether we count this time fourth time. And this is this is a very nice supply demand zone. It's a very tight zone, and we have a very big imbalance. Okay, this is out of all these four, this is the one, and maybe this one as well, where we've had a clear imbalance and prices shut up. Okay, but this is not fresh supply and demand zone. It's because it's the third or fourth time back to a supply and demand zone which originated around here. Okay, this is where it's fresh, and this is the second, third, fourth time back. Okay, so that's an important point to note when we come to talk about trading strategies, and what represents the best probability setups. Okay, in terms of second, third, or first, second, third, fourth time back. Okay. Okay, so if we think about what happens when price comes back to a supply-demand zone, okay, if we have the initial imbalance and price comes back to, say, a demand zone again, it's more likely to be met with demand again, okay, and that will keep happening until there is no available demand left at that zone and price will break out in the opposite direction, okay, and obviously the stronger the initial imbalance, the stronger the chance of demand or supply being met at the first, second time back again, okay, but as price comes back more and more times, then obviously the chances of the same strength of imbalance occurring is obviously much lower. Okay, so with each time price returns to the source of the initial supply-demand imbalance, this supply-demand balance is getting weaker. Okay, this will occur until there is no supply-demand imbalance left, and price will either consolidate again, or a supply-demand imbalance in the opposite direction will take price straight through, and we'll have the breakout in the opposite direction. Okay, so we can see this on this chart here. We have the initial supply-demand zone, we have the breakout, It's a good momentum breakout. Demand exceeding supply, so this is a demand zone. Price comes back once. Demand exceeds supply again, and we have another move up. Price comes back again, and again, demand exceeds supply, and we have a good move upwards. Okay, but as we said, at each time price comes back, the supply-demand balance is getting weaker. Okay, so the third time price comes back, it comes back with very good momentum, and we can see that there is not much of a reaction here. There's a very small reaction, but price breaks out in the opposite direction. Okay, because the supply-demand, there is no longer a supply-demand imbalance at this zone. In terms of, there is no demand, no fresh demand left at this zone, so price pushes straight through because the supply exceeding demand in this move is stronger than any remaining demand at this zone. Okay. Okay, so the last point to note is it should follow from what I've said already that the highest probability of the same supply-demand imbalance occurring is on the first retrace to that zone. So on this chart, back to here, this obviously represents the highest probability rather than the third time. Okay, what I was talking about in terms of using up demand or supply on each return back. Okay, so we should be able to conclude that following a sustained good momentum breakout from a clear, well-defined supply-demand zone or turning point, the first retrace back to this zone represents the best probability of price again rejecting this zone. Okay, i.e. the best probability of demand being met with more demand and supply being met with more demand, supply being met with more supply is on the first retrace. Okay, so the last example, last chart of this video, again this highlights what I've been talking about. I've identified turning points and consolidation zones, either supply or demand zones, and look at the first retrace back to these zones. Okay, first retrace back to a supply-demand imbalance occurring at a swing is obviously going to be a double top or double bottom pattern. Okay, so we can see on these two here, double top, double bottom, first time back to a demand zone, in this case a supply zone. Okay, we have a consolidation, price comes back, rejects it. Same here to here, and same this one to this one.